Clearly have risen at the fastest pace, but let's bring in our guest today to understand the ramifications of what we are seeing by way of the inflation numbers that are being reported. Let's go across to Jan Lambregts. He's joining us right now on the phone line or live as we see him. Great to see you, Jan. Thanks for joining us and making the time to explain what's going on with the inflation prices. These food prices, Jan, they've risen at the fastest pace since 1981, according to the reports I'm reading. And the larger ramifications of what I want to understand for the U.S. economy, how will these inflation numbers affect the Fed's monetary policy stance? That's the big question, isn't it?
Yeah, good evening. Thanks for having me on. I think looking at these numbers, this is not exactly what the Fed was hoping for. It's early days. I don't think today's number would have swayed them either way. They seem set on their path for the next couple of months. But inflation came off less than expected. And if you look at it, it's spreading through the economy. It's also spreading particularly to the services sector. And that is much harder to contain. So I think this doesn't leave the Fed much assured, really. It leaves them more assured that they need to continue on the course they're on. Of course, the course they are on is not the safest of courses, because frankly, they must know that the medicine they prescribe, as in rate hikes, isn't the one most fitting for the situation. Many of the issues we still face have to do with supply chains, and typically that's not what would work. But that's the only instrument they got there apparently, so they're going to use it.
That pans out, but meanwhile, there are other problems the world is facing. The inflation numbers of the U.S. on one side, there's the Russian invasion of Ukraine, exacerbating global food and energy prices. There are extreme lockdowns in China over COVID-19. They are worsening the supply shortages that you spoke about. So how are developing economies like India going to cope? How do you see them getting impacted?
No, they're definitely getting impacted, and I think you're mentioning quite a few of the key issues here out there at the moment. Both on the demand and supply side, there are real challenges out there. In large parts of the world, COVID is indeed behind us, but very crucially, in key cities in China, those lockdowns, they will reverberate around the world. It's yet another supply chain shock coming to us. For demand, some normalization setting in, you'd think, as a result of sort of the post-COVID bounce. At the same time, central banks weighing in against that and hoping they can slow down economies, bring a soft landing about, as the Fed would say, without actually impacting employment. I think that'd be really hard. And I think in emerging market economies, it's even harder so, because central banks there have to act. They have to defend currencies. They have to fight inflation, which is typically higher and takes off quicker, and it's more volatile to curb. But governments don't have the string purses there. They don't have the fiscal leeway as much as in the West to offer subsidies to ease some of the pain. For example, energy markets linked to the war in the Ukraine, or food price increases, as you pointed out.
Jan, do you see a drive now among investors for Safehaven assets? How do you see the demand for bullion, for example, going ahead in these in the light of the kind of numbers that the U.S. is reporting in its inflation?
I do think we have seen some safe haven flows there, but they're pretty selective there. I mean, one of the beneficiary, of course, in all of this, unsurprisingly, has been the dollar. And I think that's actually a theme that can run and run. On the currency markets, though, it's interesting. We now run into a situation where various of these central banks are hiking interest rates just to defend their currency because they don't want to be importing more inflation. They want to get those traits of terms into their favor. But again, that's a competitive game. We see, I think that's one of the reasons why we expect the ECB stepping up the rhetoric now. Just because the euro's been weakening. Similar story, I think, for emerging markets, where they have to defend currencies just to curb imported inflation.
Jan Lambregts, appreciate you joining us. Thanks very much for making the time and putting this in perspective. U.S. inflation numbers still very high at 40-year